for you yesterday. The story we painted for you yesterday was about the idea of pump and dumps, bear raids, the idea of exhaustion prints, the idea of value overlaying on top of these things. And this was a great example because we'd actually chatted about this S&P prior to this rally going through this phase, correct? Because it looks like it could be a pump and dump at the top edge. Looks like it could have been a pump and a dump at the top edge. But obviously, we explained that it wasn't because the buyers were legitimate. So if the buyers were legitimate, then obviously we don't use that as a pump and dump story. We simply try and join in with the buying at lower prices. That's the point. This is why we can't take order flow in isolation. We've got to take it as part of an overall storyline. We can't just take it in isolation, right? We've got to make sure that when we see these stories, that we try and put a storyline behind it. We try and build out the narrative. And obviously that's what we're trying to see, guys. That's what we're trying to establish, is what is the narrative in here. You can see, for example, on the gold, you can see that exhaustion that we've been talking about this morning. Did anybody buy the exhaustion here? Did anybody buy into that exhaustion? We talked about that before it happened. And obviously when the exhaustion came in, the real yields has started to fall. The dollar was starting to steepen. There is no doubt that you buy that bottom edge, correct? Yes or no? Yes? There's 100% certainty that you've got to buy that bottom edge, yes or no? 100% certain? Well, you got the squeeze. You got a squeeze. It was only for what? What was the previous low? It was 31.1, Paul. The low was 30.8. You only get 3 ticks, but you got 3 ticks. How much of a squeeze you want? So in that 3 tick squeeze, you must have been able to find a volume node that you could put a buy lean against. Immediately it flips back out of there because you don't know if it's going to go 10 ticks or 5 ticks. You've got to find a buy tick you've got to find a buy stop order that you can put a lean against, though, can't you? That was the whole point of that classroom where we started to talk about being able to, if you like it as a buy trade, there's got to be a level. But when you look at the delta, do you really think you're going to get a massive stop run when you look at the delta and there's no sellers in here? When you look at the delta and you look at that bottom edge and you think to yourself, oh yeah, I'm definitely going to get a 500 tick stop run when there's no sellers, where are you going to get the sellers from? There is no sellers. There's no sellers. That's the point. So when we start looking at that exhaustion, we say, right, bottom edge. That's what the whole classroom was about. Obviously, you weren't in for the classroom, but that's what we did a classroom about this morning, Paul, was we were talking about exhaustion, that we buy the bottom edge. We buy into that bottom edge print because that's what the whole classroom was about this morning. Yes or no, guys? So that's one for Paul to look at when we get back to the classroom settings, is to try and understand why that was an absolute certainty that we had to be involved in that trade at the bottom edge, because that's what we discussed this morning. So great trade at the bottom edges. It did exhaust out. We've seen a buy reversal coming in. We had Voltics at a price of where did the Voltics come in at a price of, guys? We had Voltics at a price of about 31.2s, 31.3s. And obviously since then the gold price has gone to 33.9s, 34s. So it's about $250, $300. So you can see the value of the class we just gave, because it should have been worth $300 to Paul on this one. Should have been worth $300 to anybody trading gold on this one, because that is just exhaustion. There is a massive value divergence against that exhaustion print. And that's all exhaustion is. Exhaustion, remember, isn't necessarily about the delta against the tick. It's a delta against the price. That's what exhaustion is. And obviously in terms of the exhaustion prints, we've been trading a lot of exhaustion prints on cable today. We had an exhaustion high, we had an exhaustion low, and we were able to get a nice swing into the sells. We were able to get a swing into the buys. And this is not exhaustion, because you can see real money selling coming into this current low here. So we've got to try and get a better story. We don't have an exhaustion story on cable at the moment. That gold's just broken higher. It's now trading 35s, guys. So $400 and a profit take for me. profit take for me on this occasion, because we're obviously coming into a block trade top line. So I want to make sure that we get bag and tag some of that money. And the target price for this, assuming real yields keep falling, and that's the big assumption, if real yields keep falling behind this, the target price on this guy's 39s, so about an $800 target on this, and that's where we're targeting, 39s, 38.5 for a realistic upside potential if real yields keep falling. Well, we've just broken the neck of that baseline there, so we've just broken the neck of that baseline, so we're on our way to that target price now, and things are looking good. Things are looking good, guys. Okay, we talked about this as a spread as well this morning, and obviously based on the spread idea, there wasn't a spread narrative in here at this stage because the yen has gone up, but I don't like the sell on the yen, that's for sure. With the divergence, and it was a massive divergence on the metals. Look at the divergence we had on metals. With that massive divergence in metals and with the yen catching a bid, the only thing I was waiting on was the real yield falling. Real yields fell. I got an exhausted bottom edge. I bought the exhausted bottom edge, and I've just made myself $500 per contract. Storylines, building those storylines, guys, and we simply annihilate the upside of the marketplace. Did we get a transition? Well, we actually got a transition on the trade as well in terms of order flow transitions. So that was also another feature of the bottom edge here. Take a look at gold at the bottom edge here. See how we went from the sell transition here, the red candles, to the buy transition here, blue candles? So we went into a buy transition on these two candles here, yes? It's just so that when I take them away, you'll see what happens, right? So we went into a buy transition there. What does that mean? Well, this book transition here means, very simply, they're adding bids and pulling offers. They're adding bids and pulling offers. Is that not a transition trade? Of course it is. That's what a transition trade is. They add bids and pull offers. So when we then look at those, this was on a down tick trade. You see it? That was on a down candle. So when we see that on a down candle, we start saying to ourselves, right, we've got the huge volume absorptions here. So there's the transition of volume absorptions. And this is just that exhaustion low volume test. So obviously with that exhaustion low volume test, it's a case now for me simply to say, right, get me in, for God's sake, get me in. Buying into that as a storyline. And as I said, we've just popped the top edge now, guys. That is a crazy good trade. That is one you must be in, Paul. You must be looking at getting into those trades. Oil, we made landfall at the bottom edges there. The bottom edge, remember the original target for the oil was 115.50s. What are we doing though? I mean, obviously we've taken profits, but we never closed out the position. But I'm starting to run out of excuses to hold on to this short, guys, at the moment. So looks okay. It looks okay. So we've had some crazy trades, guys. Crazy trades. Equities, long bonds, gold, forex markets, all of them unbelievable. And I've loved the equity levels. I mean, what? I mean, obviously this is just key strikes, guys, but my goodness, come on. Waking up to these opportunities. We obviously give you these prices, early diddles as much as we can. We try and give you these prices as much as we can, as early as possible, so you've got a chance to start using them if you want to use them. But this is the levels we gave you last night, and this is obviously now this morning. This is from London session here. So we give you these levels about midnight last night, and you can see what's happened. Look, just drawing the levels on their own, Melbourne, drawing the levels on their own. Look at this level here for a possible sell. Look at this level here for a possible buy trade. It's the only two levels you've got on your charts, right? So there would have been a possible sell coming away from there, a possible buy there, a possible buy there, and a possible buy there. Come on. Make it any easier, or what? That sell was 55s to a low price, guys, at 20, nearly 25s. It's a 25-point move, being conservative in your numbers. 25-point move, $1,250. Pretty good trade. The buy at 30 traded nearly 50. That's 1,000. The buy at 27.5 traded 40. That's 600. So that's a massive 1,000, 2,500, 3,200. In this trade, that's just on 1,000. $3,000, $4,000, $5,000 in profits if you were trading the full overnight session. If you were only trading London this morning, you might have caught this one, but you would have caught this one and this one. Massive profits simply on these levels. Massive profits on these levels. But it wasn't just the levels. It was the value into that bottom edge that was so good. It was shocking if you didn't get it trade. If you didn't get the trade, guys, you would have been hanging your head in shame on the value that we had on this S&P this morning. The sell was spectacular. The buy was spectacular. The sell came from that 50 top line. The buy came from that 30 bottom line. You couldn't make it up. Was it one sell? Nope, it was a group of sells and then a squeeze. Was it one buy? No, it was a series of buys and then the squeeze. Trading bottoms and trading tops isn't about usually one buy or one sell. It's usually about an accumulation of stories. A storyline that sometimes reverses when we're in the accumulation, causing us to exit at the fair value mid-price, the POC, and the market continues on its merry way. Or alternatively, the value stays with us and all we do is keep doing the same trade with confidence. With confidence and with volume and with games and with the manipulation to try and get as big a trade as possible. Does this sell pretty much not look identical to this buy trade except in an opposite direction? It's almost exactly the same story. Sell side top edge, buy side bottom edge, massive short value, massive long value, and a massive two trade outcome. Unbelievable? No, it's what we teach. It's up to you to convert it into trades. Now, you tell me if we have the value to trade those areas, yes or no. You tell me if we have the value to trade those areas, yes or no. And if we've got the value, you tell me why you're not in it. Because you had higher highs and lower lows, you had high volumes, you had big blocks, you had levels, you had narratives, you had key references in the background. So for this sell trade here, we had this key reference in this block trade in the background here. And for this buy trade here, we had this key reference buy block trade here. So we've got references. We've got references, but we didn't just have references. We also had what? The delta strikes. The delta strikes were in these areas as well, remember. So that delta strike was 55 down to 50 area. There's the delta strikes on our big macro charts. And where was our delta strikes at the bottom edge? Or just below 30. Just below 30. There's our delta strikes just below 30 there. And obviously that's where our delta strikes were there. You've already seen it. It's on that chart there, guys. We showed you it. There it is. 55s. 50s, you can already see those big blocks coming away from that 50 level there in the background. You've already seen it. You had the level 2 sell there. You had a level 2 sell there. You've already seen it. Into the bottom edge, you already know 30 is the bottom edge. And when you know 30 is the bottom edge and you know there's a key strike there and you know that the key strike now has a massive value divergence, there it is. Buy the damn thing, for God's sake. What the hell are you here for? You're in a trade. Brilliant or what, guys? Brilliant or what? Mike, it's our sentiment line, the line we use every morning. Not just one or two mornings. Not just when we see a good value divergence. It's the sentiment line. It's the NASDAQ against the dividend stocks of the YM. The NASDAQ against the YM. NQYM. Brilliant sentiment line for London session equities. Because it is equities. It's an internal almost sentiment. People buying growth at the expense of divvies is always a buying opportunity for us to get involved in. Brilliant, tradable, easy money levels, and brilliant tradable outcomes. Massive profits for equity traders today, guys. Massive. Welcome in, guys. Hope you're all good. I'm going to grab some lunch. I'll be back in 10 minutes.